You should think of Bitcoin as like it's the granite underneath Manhattan, and you can build a 10-story building, a 100-story building, an apartment building, a townhouse. You can build a park. There's a lot of ways to use the granite. So you're like, well, do you want to live in your own townhouse where you can walk out on the street, or do you want to live in an apartment 35 floors up where you have to take the elevator? The ETF is the 100-story building where you got to take the elevator. What's the problem? Well, you trust the building. What's the benefit? Oh, it's 10 times cheaper and easier to live there. And maybe you can't afford, to buy the townhouse. Right now, today, I think there's 28 different active ETFs. Okay. So there's ETFs in Hong Kong. The Chinese government and the Hong Kong government may not let you invest your funds in Bitcoin. In fact, they'll make crypto trading illegal, but they'll let you buy the ETF. How about the ETF that'll come to China? You'll be able to buy that and get Bitcoin and get the benefits economically of Bitcoin, but you won't be able to buy the underlying Bitcoin. And so what do ETFs do? Well, they meet the need for people that have stranded capital that's locked up in a 401k. You might have money in a 401k and you can either buy the S&P index or you can buy Bitcoin, but Bitcoin will double the S&P index, but you can't get your money out of the 401k. Maybe it's impossible to get it out. Maybe you get taxed on it. The ETFs are securitized versions of Bitcoin. They're applications of Bitcoin that meet a certain need. Now, why do the Chinese, maybe they might want you to buy the ETF and not buy the underlying Bitcoin? Because the Chinese don't want capital to flow out of their country. They have capital controls. It's illegal for a Chinese citizen to move more than $50,000 a year out of China. So you have $100 million in China. Your choice is lose it all, inflate it away on stupid, bad investments, or buy a Bitcoin ETF in China and then double it every 3 years. Is that good for you? Yeah. Is it good for the Chinese nation? Yeah. It's actually good for the nation and good for the investor. Okay. Well, what'd you do? You trusted the custodian of the ETF. That's the negative. Is it as good as owning the Bitcoin outright? Theoretically, no, because you've lost the ability to switch custodians and you have to trust a single counterparty. But this falls in the category of you don't have a choice. Your choice is lose all your money or have a wrapped version of Bitcoin. The wrong way to think of it is, hey, I self-custody Bitcoin. Is this better? The right way to think of it is 99.9% of the money in the world is not invested in Bitcoin. Bitcoin's $1 trillion out of 1,000 trillion, right? So 99.9% of the money is invested in something else. How is that money going to flow into the ecosystem? And ETFs will be one of the solutions to actually pull that money into the ecosystems. And it's not about diminishing the value of your Bitcoin. It's about improving the value of your ETF, right? It's fixing the ETF, right? If there's hundreds of billions of dollars invested in defective ETFs, the ones on Bitcoin are not defective anymore. So in fact, you're fixing that part of the economy and the money is flowing this way.